Well, since I spoke with Gary, there's been some new developments. So we've asked him to join us back at the VME for a quick update. Gary, thanks for joining us again.
Thank you.
So, Gary, what's the latest on COVID-19 and the impact it's having on our industry?
So since we talked, there have been some developments across several lines of business. There's certainly been a lot of political noise about whether business interruption is covered or not. We still have the same view that we did then, that it's going to hold up, that the exclusions are going to hold up, the need for direct physical loss, that definition is going to hold up. And of course, there could be exceptions to that, but that's something that's very hard to predict. The other thing that has changed is probably on the workers' comp side, where there's definitely been some regulations presuming there to be a compensable injury if you have COVID-19. It's unclear exactly how that is going to play out, but it is something that's out there, remains one of the unknowns. I'd say that we've gotten some certainty around what's going on with auto insurance, that in fact there was a lot less miles driven. So the benefit that we talked about last time, that really happened. And then I know some of the things we talked about on capital. Probably since we talked, there's been a little bit tougher time to get capital into the market. I mean, there's been a lot more of this alternative capital that has been withheld, and people are less sure about what it means. So it's been a little bit tighter on the capital for the exposures. This would be going forward as opposed to what we're looking at right now. But those are some of the changes that have happened.
Okay. Yeah. Well, over a number of carriers have been reporting quarterly results, and I think that's what you were speaking to. What else besides the auto and workers' comp? Are you seeing anything else in the numbers?
The numbers actually don't show that much so far. Some of the reinsurers have taken a stab at putting up some IBNR for the losses that they think might be coming. And in some ways, the reinsurers have been more dominant in that. So that includes the Europeans, Swiss and Munich, and all putting up, let's call it a couple of $100 million. We've tried to keep tabs on who has put up what. And if we add everything up, it really is only in maybe the $5 billion range or so. And we think there's clearly a lot more to go. But some of the primary companies didn't really put up very much. They didn't get that many claim notices, so they didn't put up much in reserves. But clearly there were some things that came through on the event cancellation side, A&H, anyone that was doing travel insurance, even some of the personal lines companies that do wedding cancellation, you could see a little blip in their numbers. So there were definitely some things that were coming through, but no one seemed to be booking in anticipation of some of the things we're more worried about, like workers' comp, like the directors and officers liability, professional liability lines, even in the medical field, aging services, nursing homes. There's a whole host of possible causes of action that I'm sure there's attorneys out there working on it right now.
Okay. I want to dig a little bit more in the numbers. I'm a numbers guy. Any other trends you'll be watching for as we look ahead?
We will be watching for going forward. In the commercial line side, we will be watching to see if there's any additional claim activity or what companies have booked. Because as I said, a lot of companies did not really take that much of a loss on COVID in the first quarter. Right. So we're assuming that much more of it will come in the second quarter. Certainly, we're watching that. And just thinking about the numbers themselves, the numbers actually in the earnings were actually pretty good. I mean, the earnings that companies were reporting actually weren't that bad. There were a lot of things that were going favorably because it looked like frequency in some lines outside of what you might have been worried about on COVID actually were doing pretty well. So the numbers actually were probably better than expected at a good amount of the time, not every time. Looking forward, I guess we'll also be looking on the auto side for more confirmation that April was actually better than March, because the first quarter, all we got was two weeks basically of March with lower frequency. There we had numbers, for example, both Progressive and Allstate gave us frequency numbers for March that implied that they were down significantly, 40-50% in the second half of March. That probably continued in April. So we'll be watching that kind of trend as well.
Good. I'm going to some questions from our audience here. I've got some on technology and capital, which you spoke to both during our interview. Let's go to capital. What do you make of the reports of trapped capital being caused by COVID-19 uncertainty in the ILS market?
So yes, there is concern about the trapped capital. A lot of the way this market worked was that you would release the capital and it would be available for another round in the next year. If it's trapped, and we're seeing signs of a number of deals where you will probably have trapped capital, it's just less available. There's a little more caution on the investor side, and so I think it has had an effect at the very high end. So at the retro level, the reinsurers who are buying reinsurance, that's where I think we're seeing it the most, and rates and terms are getting tougher there. That's still in the works because we're in the midst of 6/1 renewals for Florida. That's a place where people might play, and it's not clear yet, but it is definitely a factor in what we're seeing in the capital that's available in that market.
Great. Let's turn to technology. We have a question here. Do you think the state insurance departments through the NAIC will embrace technology to make it easier for companies to conform with the regulatory guidelines?
You know what? I don't know. I hope so. They're, to the extent that the regulators themselves need things to be easier too. They're probably falling behind a little bit on technology. I mean, we see it ourselves because we like more information from the state regulators. They have a lot of press releases, but it actually is hard to get the numbers that you like. Getting numbers out of them isn't quite as easy. I hope that all works to the advantage of the regulators as well, but I'm not sure that's where the technology is actually focused right now. It's actually focused more on the processes of the insurers themselves, trying to make them more efficient and more interactive with their customers.
Right. I don't know if you had an opportunity to listen to JP's getting us started this morning, but he was saying that, as leaders, being effective leaders, we need to kind of step back and have an appreciation for what's going on right now, even though we're all dealing with some level of chaos, personal and business for many of us. What do you think? This is the first time perhaps you and I have lived through a pandemic. What takeaways have you? What have you learned, and what do you think when we get back to the new, whatever it is, the new normal? Is there anything that you've learned through the last 6 or 7 weeks through this, from either a personal or a business perspective?
Yes, there's certainly things I've been thinking about, because it's clear that the path that we get back to a normal economy again is going to take longer. I think when we first talked there, we hadn't been in it very long. It seemed more plausible that we could move back quickly, but now that the duration's been extended, I think it's going to take longer. And then you do start to wonder what the new normal is. And I do think there's we've all been forced in the insurance industry, they've been forced to do things remotely. So is there going to be a little bit more remote claims adjusting? We were already going that way, but there could be a little bit of an acceleration. And I think there's an acceleration on other things as well that companies might have been working on systems to do things remotely, work with customers, all of a sudden they're pushing, we need to get this done. There's this little technology boost to get there. And the other one, this is more on a personal note, but I do sort of wonder whether seeing doctors remotely might be a more permanent thing and much more acceptable than it might have been in the past. So I think there will be permanent changes. It's hard to read them right now, but to the extent that people stay home, it seems to me it reduces risk. So it's good for the insurance industry.
Great. Looks like we've got another question here, which is timely because a lot of the country is now opening up again or reopening up. As businesses looking to reopen and the concerns they have with respect to liability, D&O, BI risks, what should they be asking their insurer, agent, or broker to make sure they're protected and able to return to operations?
Well, yeah, you're touching on a big issue that we've thought about. It isn't directly the question, but just whether any legislature is going to give some cover on litigation. If you go open your business again and people start coming into your store, or your shop, or your restaurant, and then suddenly they come down with the coronavirus, are you going to be sued because somehow you might have contributed to that? It would be nice if the legislatures provided a little bit of cover for that. Now that said, I don't know that you can't count on that, but I think what you need to do in any business is you're going to have to take certain precautions. You're going to, there's probably going to be places where they'll say, masks required when you walk in the door. A lot of signs that say, please keep your social distancing. And so if you're someone buying insurance and talking to your agent about what to do, I think those are the kind of risk mitigation type actions that you might want to take as you open up, just making sure you're in compliance with whatever the best suggestions are for minimizing the spread of the virus.
Yeah, we saw some of that this weekend in the reconfiguration in our local Costco here, or the lines in the grocery stores, in terms of a lot of operational changes, and hopefully everybody feels safe, and there's still the convenience of being able to shop. Well, thank you so much, Gary, for being with us again.
Thank you, Ed. Yeah, it's been a pleasure. I enjoyed it. Thank you very much.